Hello, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors and Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Hello and welcome to this weekday Motor Trade Radio podcast. Today we're delighted to welcome David Manchester, founder of Automotive Assets. David will be a familiar name to many listeners from his days as managing director and vice chairman of Charters of Aldershot, a business he led for nearly 20 years. During his time at Charters, he was also the high-profile national chairman of the Peugeot Dealer Association. And before that, he was the managing director of MCL Retail and was a general manager at Inchcape. In 2013, with his track record as a highly successful entrepreneur in the car retailing sector, he founded Automotive Assets, a business dedicated to helping dealer owners manage their property assets through structured disposal programs. Now, the sector is currently seeing a degree of M&A activity, with bigger groups strategically acquiring additional sites. Recent transactions that we've discussed on the pod include Thurlow Nunn acquiring Spirit Motor Group, Granger Motor Group acquiring Norton Way, and EMG Duxford Nissan, as well as John Clark acquiring Barnett's Volkswagen in Dundee and St Andrews. So we thought this would be a really good opportunity to have a chat with David about what he's seeing in the sector. So welcome back to the pod. It's great to have you on, and it's been a long time, hasn't it?
Thank you, Curtis, and thank you, Phil. It's great to be back. Checking my records earlier, I've noticed that it was 10 years ago to the date that I first appeared on Motor Trade Radio. So thank you for inviting me back.
Well, it's 10th anniversary. It's all deliberate, this, David.
You must have been near the front because we this is our 12th season now. So yeah, you were very early on in this podcast, and you're still going strong.
Well, we both are.
Yeah, exactly. So there's a bit happened in that 10 years then, David?
A lot's happened, Phil. Yeah, absolutely.
I've got a bit older, that's for sure. But I mean, as Curtis said, I mean, what a career, and it's absolutely fantastic to have you back on. So let's start things off, and first of all, tell us a little bit more. Outline what Automotive Asset is and does, and probably as a follow up to that is, what is a typical disposal scenario and a deal that you would get involved with?
Okay, well, to put it simply, the way I describe what I do to complete strangers and people outside the motor industry is to say that I'm an estate agent for car dealerships. So I broker the sale of car dealerships. I don't buy them myself. I've done that in the past, but I broker the sale to a new owner, be that an alternative use owner or a continuing use owner. So a typical disposal scenario is that I'll pick up an inquiry. Maybe most of my inquiries nowadays come from LinkedIn. I'll visit a potential client and we'll talk about what's driving their consideration to sell the business. Normally, it will be retirement, and they don't have a succession plan in place. So they've decided that the best route to go is to consider selling the business. So that will start the conversation. And then we'll talk about alternative use versus continuing use. Alternative use is where it'll be very likely a subject to planning deal, and we'll sell it to one of the three high value buyers in the sector, which are retirement homes, retail with low cost brand supermarkets, and self-storage.
And within that, David, I mean, as a typical buyer, and you talk there about obviously, there's sold as a going concern, and I'm presuming that's a retailer selling to another retailer group as such, and as you say, sometimes where the brands, whoever that is, has moved their partnerships, or as you say, the retirement and no succession plan. And obviously, you mentioned there about that change of use. I mean, does the sites tend to go one or the other that way? Is it tends to be either that change of use or a going concern rather than just an exit entirely?
Well, if there's an exit entirely, then what does the owner do with the business and the property?
Yeah.
So in some instances, I will sell the business to another operator, and they'll buy the assets, the goodwill, and I'll tutor the staff over. But the property may be sold for alternative use.
Yeah.
But that's rare, but it does happen. So generally, the most common route is to another motor dealer group in the locality, probably within an hour's drive time, holding the same brand within the portfolio. If they don't have that brand in the portfolio, it might be one that they're seeking to acquire. So buying the business, they, subject to manufacturer approval, acquire that brand.
And David, how would you describe the current appetite for both disposals and acquisitions, and how has it changed in recent years?
I don't think it's really changed, Curtis, to be honest with you. In terms of age, my target age is anybody over 50. I think if you've been in the industry for a long time and you've passed the age of 50, people start naturally thinking about how long they want to go on, particularly if they don't have a succession plan. If they've got family in the business, then they can probably carry on as long as the family will let them, to be honest with you. But if they don't have a succession plan, my view is anybody over 50 is a target, and I'll start talking to them because some of the deals can take 5 years. So it doesn't always happen within 6 months. Most deals happen within 6 to 12 months for continuing use. Alternative use takes a bit longer because of the planning, but the longest deal I've had is 4 years. So the time goes by very quickly, particularly in this industry. So I find that the earlier people start talking to me, the better the outcome.
And in the scenarios that you've been talking about, where someone is retiring, they are exiting, and the business is being sold as a going concern. In those scenarios, what are buyers typically looking for?
Well, they're looking for a good brand. They're looking for a good facility, hopefully a facility which complies with the manufacturer's current corporate standards, because they don't all do. And as a dealer nears the end of their career, they probably spend less on keeping the property to the proper specification. They'll bulk at hefty corporate investment requirements from the manufacturer. So that can be driving a decision to sell. When they're asked to spend £100,000 on the showroom, they don't want to do it. So in some cases, an incoming buyer will have to make the facility corporate. But if it's already corporate, obviously that's a bonus. They'll look at good practices, policies, procedures, good staff retention, good customer base, and a nice market area.
And I mean, David, consolidation's not new to the sector. We've seen general consolidation happen continuously over the years, but how much of an impact has the recent consolidation or acceleration of consolidation by the OEMs, and not just people like Stellantis, and more recently the Volkswagen Group slimming down their partners through the Ideal Network plan that we've been talking about quite a bit recently. How is this, in terms of this impact on the owner drivers within the sector, how much of an impact is this sort of consolidation by the OEMs having on those parts of the business?
Well, in terms of the owner drivers looking to sell, if they've got a reasonably desirable brand in a reasonable market, it will have no effect at all, because that's a desirable proposition. Because as with land, they don't make it like they used to, and there are less and less privately owned dealers, and when they're all gone, they're all gone. So there'll be limited options to expand once that's happened. It'll just be heavier consolidation with bigger groups acquiring smaller groups.
So, David, we to that point, and we talk about that ideal network plan, and that's just an example, and it's not unique to Volkswagen Group, but this is this a case that actually this is forcing some of the ones that may not have a succession plan, but actually forcing them into making that decision earlier than they may want to in terms of exiting the sector earlier than they may have initially planned?
Definitely, Phil. Some of the dealers involved in these transactions have definitely not wanted to sell, but they've been told to by their brand, so they've got no option. But it's no different to what's happened for many years, where a brand will come along to a dealer and say, "Sorry, we don't think you've got a point here anymore. We want you to move to a different town," and the dealer doesn't want to.
Yeah.
So there's many different situations which force a dealer to sell. Another instance could be ill health, and their family say, "Sorry, you need to sell this business and spend some more time with us."
Do you think it's worse than it's been for some time? I mean, we were talking that you were on the podcast 10 years ago. We're talking pre and post pandemic, and we talk about consolidation in its broadest sense. Do you think we are seeing a period of accelerated consolidation compared to what we would have seen over previous decades?
To be honest with you, no, I don't. I remember when I was National Dealer Council chairman at Peugeot, and they said, our current volume is 250,000 cars a year, and we can see a point in the future where it's going to be 100,000 cars a year. So we won't need 325 dealers. So those kind of decisions force massive changes on the network, which have happened for many years. If you go even further back, it was the same with British Leyland and Ford when they had hundreds of retail dealerships. Ford did it with 200 retail dealerships, just before COVID, and said we're going to close 200 retail dealerships. So no, it's always been there.
So it sounds like it's just one of them repeat, one of those 10-year kind of periods that we tend to go through on a regular basis for those that have been in the sector long enough, I presume, on that one then, David.
Yeah, exactly.
Fantastic. Well, we'll be back with more from David after this brief break.
You're listening to all the chatter that matters on this special weekday episode of Motor Trade Radio, powered by Motors and Cazoo.
And David, following on from that conversation about representation, what impact has the launch of some of these new entrant brands, primarily the Chinese brands that are coming to the UK, what impact has that had on smaller dealers and some of the regional groups that you talk to?
Well, to be honest with you, Curtis, it's absolutely massive. I've been amazed by some of the conversations I've had with dealer groups that have taken on these brands. I'm not going to name the brands or the dealer groups, but they are absolutely amazed by the amount of cars they're selling. And it's changed things in ways that we probably never imagined. So, redundant units, redundant facilities, which you would have thought would not had a future as a franchise dealership, have come back into play. Dealers are extending existing facilities to accommodate these brands, building new ones, and buying new dealerships. So it's had a big effect, and I think that's probably the biggest change, certainly in my career, that I've seen. And I think it's a very exciting time for the industry to see so many of these cars being sold.
Yes, definitely. And are you finding that some of the disposals that you're managing are being snapped up by groups who want to put one of the new franchises into what was potentially a legacy site?
Yeah, that happening more and more and more. And the first rounds we had were obviously with, having said I won't mention them, I'll mention BYD, Amoda and JQ, but now we're seeing Cherry and Geely coming in behind, and the demand seems to be unstoppable.
Yeah, I couldn't agree more with that one. I think the trying to keep track of it, and you're, as an avid listener of the podcast, you remember our chat with Robert Forrester not that long ago, and we were talking about the 75 brands, and I'm not sure if that is the case as of today. It can change very quickly, but I think Robert and the three of us were kind of would we name them all? It sounds more like a pub quiz question these days as to how many manufacturers there are in the UK. But as you say, a lot of activity then plays down into that dealer market, which is obviously where you operate. And I mean, David, just recently we mentioned on the podcast about the Savills report, which we covered, suggested dealerships' investment opportunities are the most attractive they've been for over a decade because of the values in 2025 had dropped to 2012 levels. Is this something you're seeing? And is this better for buyers than it is for sellers at the minute?
I'm particularly not seeing this because obviously the Savills report is related to purpose-built dealerships, whereas I'm converting old dealerships into something else, be it a retirement home, a supermarket, or a self-storage facility. And generally, the values from those buyers will be double the existing motor trade values.
Right.
So that isn't in my world. But obviously, they're very experienced in what they do, but they are focused purely on purpose-built, ongoing facilities, mainly out of town. The future of motor retail.
And you see that, I mean, just onto the point you made there, that see the values. I mean, and I don't know your view on this, David, and forgive me, but because obviously through the years we've had say Robert Forrester on from Virtue, we've had Matt Lavery from Cambria, and others have all challenged of how undervalued the motor retail sector is here in the UK. But to your point there, that some of these assets, some of these facilities, buildings can generate good value when going through that change of use into another sector away from motor retail.
They can, but they can't do it as motor retail operators.
Yes. Yeah.
Because the profit isn't there to generate the value as motor retail. It's only when you put something else on it, which makes a higher margin, higher return for the investor, that the land value of the property goes up significantly.
Once it's gone away from motor retail.
Correct. Yeah. So, I understand where Robert and Mark are coming from, but this is a different scenario.
And finally, David, what do you think will drive exit and disposal trends over the course of 2026? Is there anything you're noticing or have noticed over recent months that we're going to start seeing more of this year?
It's early days, Curtis.
Yeah.
We've just got 2 months under the belt. Obviously, the situation in the Middle East has just sprung upon us over the weekend, and we don't know how that's going to pan out and the effect it will have on us. If fuel prices go up massively and consumer confidence disappears, that will have a big effect, and people will draw their horns in. They won't take risks. Whereas I think we were just coming into a sort of purple patch. I felt very confident at the beginning of this year that 2026 was going to be a very good year, mainly off the back of the new entrants to the market.
Yeah.
So we'll have to see what happens. And as Trevor Jones would say, hope for the best, prepare for the worst.
Yes, absolutely.
Norm that these days, David. and as people are listening to the podcast this week, we've had the spring statement as well.
Yeah.
We don't know what's in that as we're recording today. So yeah, anything can happen in today's world, can't it? With the changes. I mean, it's great for me. I think we talk about M&A and acquisitions, disposals a lot on the podcast, and we cover the majority of the stories in terms of who's buying who and et cetera, and the shifts that are taking place. And I think sometimes Curtis and I talk about, we've got expecting more to come, and we end up talking about it. But it just seems continual at the minute that every week or at least every fortnight we're talking about some acquisition, some kind of disposal, and it seems to be very much the norm that we are talking a lot about that M&A activity, a lot more in the sector. But yeah, and you're at the middle of all this, having those conversations, and as you say, some that can take weeks and months and a year, and others that can, as you say, can take up to 4 years that you've dealt with.
Exactly. It's quite challenging, really, knowing which deals to prioritise and which to put on the back burner. But the good thing is it's very active. There's something new happening almost every week, as you say. So it's an exciting place to be.
And I mean, and finally, I mean, it's only taken us 10 years to get you back on the podcast, and we should get you back on a lot sooner. But in the meantime, and you know, Curtis at the introduction there just talked about, you know, a couple of the deals that you've been involved with. And I know there's a lot more that you do get involved with. There's obviously many that you can't necessarily talk about. But how do people get in touch with you? I know you mentioned LinkedIn. How if any listeners that want to have a conversation with you about their business, how can they get in touch with you, David?
Well, they can go onto my website, automotiveassets.co.uk. They can send me an email from there. They can, I think my phone number's on there as well, or through LinkedIn. So there's multi levels to contact me.
Excellent, and we'll share your details on the newsletter next week after the weekend's podcast. But I think it was great to have you on, and I think, you know, we talk about a lot of this, but having somebody that's actually at the heart of everything that's going on and actually in the middle of some of this M&A activity, it's been fascinating as always to listen to you, David.
Thank you, Phil, and thank you, Curtis. Always enjoy talking to you.
Yeah, no, many thanks, David. Great to have you back on, and thanks for sharing some of your insights on M&A activity in the UK motor trade. There was a lot to unpick there, so thanks for that. And many thanks to you for listening to this special weekday Motor Trade Radio podcast. We're back with the headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors and Cazoo. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday.